Hello traders and investors, this is Sal doing a video here on bonds, but you can apply this to any market. What I want to point out using this chart this day is that bonds sold off, and they provided a setup that I think would be great to look. I'm going to move this back over here and notice the big sell-off in the bonds, and catching the bottom would be very difficult, but there was a nice little trend line going lower. But then something interesting happened after that. The bonds started to deviate, and the indicator I'm using here is the MACD. It started to rise even though prices stayed stagnant. The way to play this really depends on why the market sold off or what is going on. But in hindsight, since we're using hindsight, you would have had two choices: either to buy calls, sell puts, or do a variation of you could actually sell strangles. But if you were worried about a sell-off in risk assets or a rise in bonds, you probably wouldn't necessarily sell strangles, because what we're looking at right now with this deviation in the momentum is it's putting in what looks like is a base. Looks like we have a neckline around the 121 level, and you could even argue that, hey, it's building a base, and it could even retrace from its previous levels. It sold off from the 132 level down to 116. Somewhere around that 125 level, it could easily threaten. It could even rise just on pure technical extension. We could say that it's going to go to the 127 level. So because we are worried about that, the correct thing to do would only be to sell puts or buy very tight call spreads. The puts would have worked, no problem, as long as you sell far out, not too close, to make sure the risk reward is appropriate. If you think it goes up, you would love to get paid to buy it lower. The calls are a little tougher, because if the premium is rich, and they should have been, because the volatility should have been a little bit rich, you might not get as much of a move to the upside that you're paying for. So the calls might be a little overpriced for the move that you're paying. So you have to be very careful. That's why I like to start with a better break even, maybe starting with selling puts, using some of that premium possibly to buy calls. But it's been, what, 1, 2, 3, 4, almost 5 months in this basing pattern. So the best play here would have been to just sell the puts and let time heal this market. We still haven't had the move of potential upside in the bonds. It should be limited, but there is a little bit of risk to the upside, and before either the downtrend resumes or a new catalyst comes to fruition. So